oil has been steadying after plunging almost 7% on Friday. Amrita, founder and director of research at Energy Aspects, joins us now. Amrita, remind us of what has led to such a big move in oil prices. I mean, was this all to do with factoring in more tightening from the Federal Reserve, what that might do to US growth? Is that what has been weighing on sentiment for oil of late?
Oh, for sure. There hasn't been any change in fundamentals. And honestly, the Friday's move came on the back of pretty much no news. And I mean, everybody was talking around, have you seen a headline? A delayed reaction to the Fed raising interest rates by 75 bips. But equally, I think the market if oil markets, I'm saying, they have really not responded nearly as aggressively as other markets, right? Particularly the equity. So somewhat of a delayed reaction. But we would also argue that these demand fears are premature. We are still seeing very, very strong demand growth numbers, not just out of Asia, but also out of Europe. Even the May preliminary numbers out of Europe, despite record high prices, still show strong growth and now back above COVID levels. So again, some of this is just jitters and sentiment, again, weakening at a time when liquidity is thin with the US holiday. But we still don't see any changes in underlying fundamentals.
Okay. So, yeah, that was a really big move on no particular news, wasn't it, Amrita? So how intact are your expectations for the summer driving season? We saw a commentary from US Energy Secretary Jennifer Granholm talking about what the driving season might look like, saying that we know this is going to be a tough summer because driving season just started, and we know that there will be continued upward pull on demand. How much upward pull before we see demand destruction?
Well, we are factoring in about a 5% decline versus 2019 levels for US gasoline demand. And that's really been the only place we have seen some form of a reaction in demand to higher prices. It's been in the US. I mean, if you're comparing like-for-like prices, let's say the national average in the US is about $5 per gallon. That's almost $9 in Europe on average. But even in places like Asia, India is also $5 per gallon, but you're not seeing any signs of demand slowing down. But yes, in the US, we have seen some slowdown. California in particular, with $6 gasoline prices, you've seen definitely, the momentum slowing down, even if not like seeing double-digit decline. So yes, there will be a seasonal increase. I just got back from the US, and I think the one thing I'll say is that there is still a lot of pent-up demand. This is the first season after almost 3 years where there's no restrictions. But I will also mention this, is that those who may not be driving are absolutely choosing to fly. Jet demand is flying right now, sorry to use that pun, and you can see that across flight numbers, the demand and the price of jet fuel as well. So it's not, even if it's not gasoline demand, overall travel demand will still be very, very strong.
Okay, yes, as life shows some return to normal, the pull to travel is great. Amrita, a totally different dynamic for European gas prices, natural gas prices at the moment. How close do you think we are to some form of rationing of gas usage, either later in the summer or as we go into the winter in Europe?
I mean, look, we've been calling for the need to ration in Europe, and particularly now with the latest move, Freeport disruptions in terms of LNG, and then Gazprom reducing flows on NS1 to Europe, and you've got the maintenance coming up in mid-July. So we absolutely think to balance this market, you will require some rationing in the winter. Now, having said that, this morning we've seen Germany come out and say that they are going to bring back coal-fired plants from its reserves. So there will be measures like this taken by the government to, in some ways, keep the lights on. And I think that's where the biggest policy uncertainty lies. And to an extent, this is the biggest risk around trading some of these markets. I don't think for energy as a whole, we've ever been exposed to such level of policy risk. And you have all these kind of 2035 climate goals on the one hand, but in the very short term, it is as simple as, do we get to keep the lights on? And if that's the case, then you might actually see a lot of governments switching coal back on.